All right, good to see everybody. We have a really exciting video today. We're talking through the launch of Brookstone Asset Management ETFs. This is exciting news because we recently made this announcement, and for that reason, we have a very special guest, Brookstone CIO Mark DiOrio, who's with us. And Chris, I know you wanted to welcome him in.
Hey, Mark, Erin, great to see both of you. But Mark, it was great to see you last weekend or 2 weeks ago in Chicago. And I must say, the reason I wanted to invite you to this call was because I was so excited to hear about the launching of BAM, Brookstone Asset Management ETFs, and how the layman and people that might not necessarily have access to some of these strategies should really sit up and take notice. Most people invest in 401ks or 403bs through their work. But as they approach 59 and a half, they may have opportunities to hire professional advisors outside their traditional way of investing. So I wanted to bring you on and help talk us through why I'm so excited and help us to understand on an easy to understand format like you always do. You're great at explaining things. So thank you for sharing time with us.
Oh, definitely. It was great to see everybody last week at the conference and everything. But yeah, what we were doing was building out an entire investment roster. So as you mentioned, Chris, a lot of investors have kind of a limited selection and don't see all the opportunities that they may have available to them. And so one of the things that we really pride ourselves on is enhancing the opportunity set for investors. And this is just a quick little slide to show you. We have a whole series on the left of core model portfolios that we put together that are risk-based, have a mix of assets, stocks and bonds, then you invest consistent with your risk profile. So they're a whole model portfolio series. And then we have some satellite strategies. What those are different strategies that you could add to your core portfolio model, which really augments and does and adds a different dimension of risk and return to that core model portfolio. And then right there, the third from the left are our new roster of BAM ETFs. And so those 8 new ETFs that allow us to build really innovative portfolios for wealth management clients. And then on the right-hand side, we have an entire open architecture. So sometimes you get a list from the 401k sponsor, your retirement plan sponsor, and it's somewhat of a limited list. Here, we really open up the opportunity set and give you what we call an open architecture platform where we can build portfolios really customized for the end investor.
Mm-hmm. Mark, I'm glad you brought that up because I think a lot of people are going to be intrigued after they see all that information that you just presented. But I think a lot of people are going to be asking then, who is this investment for? Who should be considering this series?
Well, I'm glad you asked that because we're focused really on the pre-retiree and retiree market. We generally invest across the board for all different types of investors, but I would say we're really focused on that investor, which is unique in the space because you have a lot of theory and academic theory and indexes and so forth. But what we try to do with our own homegrown solution was basically address what our wealth management clients ask for most frequently, which would be one, with our stock selection, a valuation-driven approach with relevant stocks. In other words, the S&P 500, well, you don't need the 500th stock or the Russell 1000, the 1000 stock. But there are a good selection of stocks that really investors are able to relate to, very common names that you see and are familiar with that makes sense to go into a portfolio so you know what you own. Another one is with the difference in yields now and interest rates now is how do I take an approach to get high quality and higher interest coming off of my bond portfolio, which is available. And then a couple of elements of where do you get extra yield in the market? So that's a strategy. And then where do we take some opportunities given changes and different dynamics that pop up in the market from time to time, whether it sells off dramatically? Do you have a strategy to take advantage of that, for example? So in here, the roster is on the top 3. We have 3 stock ETFs, a growth value dividend stock basket. So 3 different. They are all selected using 30 equally weighted stocks. So we break down 30 growth orientated stocks trading below their fair value estimation, and then value stocks the same way, value orientated stocks, and then dividend focused. Try to get a lot of dividend income coming from the portfolio. And so 30 high quality dividend trading stocks that are trading below their estimated fair value. And then 2 high quality bond portfolios, an ultra short term, taking advantage of the short term interest rates and then an intermediate or kind of a core bond portfolio, again, taking advantage of being high quality. So you don't have to worry about the bond portfolio, but also taking on additional or getting additional yield. And then a couple that are a little more active. So one, BAMY, all the way at the bottom, BAMY yield, looks at adding yield-oriented securities. So really bumping up that yield, that organic cash flow from the portfolio, which is really important as you get into retirement, of course. And then BAM-A and BAM-O, which are active asset allocation or opportunistic strategies, which really allow us to take advantage of different events that happen in the marketplace. In other words, we don't know when an event will happen in the marketplace. We just know that they do. And we want a strategy or two strategies that really allow us to take advantage of those moments.
And Chris, I know that you wanted to speak with Mark because he's so great at explaining everything, but you said that you believe that this unique series solves for a lot of issues regarding market volatility. Did you want to talk about that?
Yeah, so one of the things that attracted me to Brookstone years ago was their philosophy of risk appropriate investing, right? So every client, every person that we speak to is unique, right? You cannot follow boilerplate strategies or water cooler advice, right? We're always cautious about helping people to have a strategy. And one of the things, as you saw early on the slide, was the original core strategies make sense for different investors for their different needs. But what Brookstone has built here is the ability to bolt on satellites, right? So my background being in mechanical engineering, being able to take things apart, dissect them, and put them back together for a unique perspective and experience for the client, that's really, really important. And again, I want to issue kudos to everybody at Brookstone because, I'm not easily impressed. I'm very, very skeptical and slow to move into arenas. But this is well thought out, well designed. And again, actually, thank you very, very much, Mark, for the time and the efforts, because we're starting to already have conversation with our existing clients. But if you'd like to learn more, reach out.
Did we cover every question you think everybody needs to know, Mark and Chris, asking you both?
Yeah, the only other one I would mention is fees, right? So one of the things that was not covered, what's the cost? That's everybody's number one cost. The thing, again, that caught my attention was no platform fees. And now it's like, hey, so we can actually bring value to the client and to the consumer by actually reducing some of the standard costs that might otherwise, incurred by a client. So, Mark, again, wonderful job in designing something that is actually for the client, a client first attitude. So I really am impressed, and thank you.
Definitely.
And they are
Thank you,
available
Chris.
now, right, Mark? But this is available to clients now?
Definitely. So we launched these ETFs in late September, and they're available now, and we're starting to put together portfolios. And as Chris mentioned, really thoughtfully designing these portfolios. And the most important word I think you always say is risk appropriate. You don't know what the best investment is until hindsight, but appropriate is really allocating those assets to meet your individual needs and goals.
Yeah. Well said. All right, Chris, if somebody has questions about designing their own personalized risk appropriate portfolio, what's the best way to reach you?
So our website is Professional Planning Services, and that's with an S.com. So that's always the easiest. There's a plethora of information out there, but also pick up the phone, 732-302-1810. Happy to help. We will get back to you. And again, we're not really, I don't like being sold. What we like to do is advise and educate. And if we can help interpret what you have, then we can make unified decisions on, is that what you want? And that's been our approach at Professional Planning Services.
Absolutely. I know it's always a conversation with you. Mark, Chris, thank you both for your time today.
Thank you. Thank you, Mark. Bye-bye.